Morning. Good morning. Good morning. Of
Good morning. I'm excited. I hope we have some good stuff today.
course, we'll start in about a minute or so. So really the biggest reason why we're starting at 10:15 today is because Hometown Heroes just Fallout Funds um came out at 10 and the whole office looked like a war room for the last 10 minutes. Everybody was getting ready to lock some loans and reserve some funds with Hometown Heroes. And so we were all there. I think we had like 5 people that we had to reserve funds for, so I had to kind of jump in and help the team lock in some loans this morning. But we got everybody that we needed to, which was good. Yeah. Alrighty, I'm gonna start. I know we're probably not gonna have as many people as we typically do because we are a little bit late today, which I'm okay with. Um, Let me start recording here. Perfect. Good morning. Good morning. Hope you all had a great weekend. Sorry we couldn't do Monday Mortgage Minute last week. There was a little bit of issues I was having here at the office with the internet, but it's okay. We're back this week. Um, Couple news here. So PCE, which is personal consumption expenditure, which is actually the Fed's favorite major measure of inflation. For those of you that don't know, there's the CPI report comes out, which is more of a headline report which is the consumer price index. PCE, which is personal consumption expenditure. The difference between the two is that CPI basically measures the change in pricing month over month and year over year. PCE is the actual what people actually consume. So even though prices may change, people may buy less of things. So PCE is that, just the actual consumption from the consumer aspect of it, which is what the Fed is really looking at when they're talking about they want to get inflation down to 2%. That came in at 2.6% year over year, and core PCE, which strips out food and energy, since those things tend to be more volatile, month over month, went down from 3.2 to 2.9%. So continue to let people in. So we've hit the twos mark. Now, in their meeting last week, the Fed's meeting last week, they had one on the 31st. They did not do anything with the Fed funds rate. They didn't increase it or decrease it, which we kind of knew was going to happen. I said that I think it would be too early for them to do anything right now. And so they haven't done anything. Their next meeting is March 20th, which has market odds of about 68% that they'll start to come down on their Fed funds rate. In my opinion, I believe that will still be too soon as well. I think by their May 1st meeting is when they'll actually do it, as long as inflation keeps trending downward, which it should. So Q2 is going to be looking promising for us. For the Fed funds rate and for money to be available in general. The new home sales for 2023 ended strong. New homes were up 8% month over month from December, and it ended at 4.4% year over year. The median sales price for new construction homes ended the year at 413,000 nationally. Now, there are some local numbers here. Their median sales price within the Tri-County area, which is the Miami metropolitan area, I believe is up to about 579,000, like 580,000 is the median sales price in the Tri-County area to end 2023. Pending home sales for 2023 also did really well to end the year. Month over month was up 8.3%, and we ended 1.3% higher year over year in just pending home sales nationally, of course. Case-Shiller's home price index, which for November is in. And remember that this is the gold standard when it comes to when it comes to home price appreciation numbers. It's usually the reason why they're 2 months behind. We were up 0.2% month over month, and we're up 5.1% year over year for appreciation. So that December number is going to be coming out later this month, late February or end of February, to see what the actual year ended with in total national appreciation. But November was the largest year over year gain we've seen in all of 2023. So hopefully December is just as good. Miami was a top city month over month. Not surprising at all. We've been a top city. I don't think there's been a time where we've actually gone down since COVID started in home price appreciation. We were at a 0.7% increase. Remember, nationally was 0.2. Only Cleveland, which was at 0.9%, and Las Vegas at 1% were higher. Which, by the way, that kind of tells you something about Cleveland's market. So if you're looking to invest, remember, a good thing about an investment property is you don't have to be anywhere near it. You get a nice little property management company. They take care of the stuff for you, but looks like Cleveland has been popping for the last year. Now that rates have not been doing well, haven't been doing well the past couple of days. And that's because the jobs report for January came out and it was much higher than expected. Which seems to be the story of 2023 continuing on in 2024, right? Everything that we kind of spoke about in 2023 was that jobs kind of have to break in a sense in order for the Fed to really come down on their Fed funds rate. If jobs continue to hold well, the Fed may hold off on lowering the Fed funds rate even past that May date, to be honest. So it's going to be really interesting to see the BLS report kind of moving forward in the next couple months. The Bureau of Labor Statistics jobs report showed 353,000 jobs created in January, which was double the expectations. Unemployment held steady at 3.7%. The national hourly earnings are up 4.5% year over year, and weekly earnings are up 3% year over year. So people are making more money. I discussed this in one of my trainings last week. Affordability is a big issue, but when you look at income gained since 2021, you see increases across the board as well. The increases in income since 2021 is about 15%, reported directly by ADP. And in order for you to afford a home right now in the South Florida area specifically, I did the numbers, you would need about a 20 to 25% increase on income. So you're not too far off if you've already gotten 15% increase. Affordability is still an issue, but it's not crazy. ADP's employment report, which shows private sector employment, shows a much different picture than the BLS report. Only 107,000 new jobs. Job stayers showed an increase of 5.2% of income, while job changers increased 7.2%. Okay, so that's the news for the week. We do have a new product coming in here, which is really going to help with. I'll see if this thing actually lets me do something. See programs, which is going to help us with these the issues that we're having with non-warrantable condos or condos being on the unavailable list. So this product here, this company here, is a non-QM company, but they allow for piggybacks. Okay, so while a lot of lenders may require 20-25% down, these people will allow you to put a second mortgage up to 90% loan to value on a non-warrantable condo. Okay, so this is huge because you can essentially treat condos now that are non-warrantable as conventional. The only difference is obviously the rates are going to be a little bit higher, probably in the 9s or 10s, depending on credit score and things like that. But a huge benefit to be able to kind of use these. I'm pulling up the product matrix right now. Use these different programs that are kind of coming out to help with the condos. I'm looking. So on the super prime, 90% loan to value. Minimum FICO is 600. Max DTIs is actually at 55%, so higher than a regular conventional loan, which we know is at 50%. FHA is at 56.99%. So it has a pretty, from what I'm looking at on the matrix, pretty solid to be able to kind of help people with these non-warrantable condos that we're kind of coming across. Now on the second mortgages, typically, like for instance, when we use this company, they require a 680 minimum. So just because this company here that's giving you the non-warrantable condo for the first mortgage is only requiring a 600 credit score. That doesn't mean that necessarily that's where you're going to have to be. If you're getting a second mortgage, you might have to also follow the guidelines for the second mortgage company as well, which in this case is about a 680. The minimum loan amount is 100,000. Okay, so those price points have to be a little bit higher. The lower price points, which are the condos that are doing a little bit worse, won't be able to qualify for this. But as long as you're at $100,000 loan amount, you'll be able to do non-warrantable condos at 10% down with this product, which is pretty dope. Do any of you guys have any sort of scenarios, any questions or anything like that? Because I do want to talk about one more thing. If I may, I'm looking for it. For those of you that just kind of came in, I was telling everybody, reason why we started late today is because Hometown Heroes funds, Hometown Heroes came out with $1.4 million today, and we had to lock about 5 loans. So I was sitting down with the team. We all had 1 loan each, and then whoever finished first ended up locking in the last loan for Hometown Heroes, so that way we could get the funds for the clients that needed it. Let me share my screen really quick. Think it's this one. Boom. All right. So really briefly, I want to talk to you guys about YRD. For those of you that don't know, YRD is an affiliate of NAREB, the National Association of Real Estate Brokers. This is the Young Realtors Division. You do not have to be actually young at age. We're all young at heart, which is really what we care about. If you're new to the industry, this will absolutely be able to benefit you. I'm going to be the founding president of YRD Miami. Like I mentioned, it's an affiliate of NAREB. NAREB was founded in 1947. It is the largest African-American real estate trade organization in the nation. So we do a lot of things. NAREB does a lot of things nationally for democracy and housing, including changing guidelines or helping changing guidelines on FHA, like the mortgage insurance changes we saw last year with FHA and the student loan guideline changes we saw a couple years ago. NAREB is really a big deal nationally, and so is YRD. So we're bringing it down to Miami. We would love for you guys to become members. As a member, really what we're going to be doing is I'm in a lot of these rooms and these organizations, right? And I think a lot of times it's about, trying to see how we can foster family within these organizations, and how really we want to be able to actually give you guys tangible things, right? Not coming to a lunch and learning about title insurance. Well, that is great information. I don't want to say that it's not, right? But I really want to give you guys things that are going to be tangible for your business when you come to events, right? So talking about how you can really list REO properties and somebody really giving you the tea on how to do it, right? Not just, hey, go do this and do that, and then you have to get on the phone and call people, right? No, this is the step-by-step that we took. And so just being very, very strategic and very intentional with the trainings that we have, but also making sure that we do different outings with each other and making it a small type of family young realtors thing, right? This is the best way that I can put it. I think in a lot of different markets, I'd speak to this to my friends a lot, right? When you look at Atlanta, when you look at Los Angeles, you look at Houston, right? A lot of the community there, even if they work different brokerages, are all together, right? They show up, they hang out, they have a good time. And I think that that's going to be the same thing that we want to do here. We are teaming up with YPN. You guys know YPN, the Young Professional Network of Miami. We're doing their RE Bar Camp February 8th. That is in 3 days. So it's an all-day event. It's basically an event where you go to and you have different breakout rooms on different things that you want to kind of learn about. So in the beginning, everybody will write notes on kind of what they want to teach. And then from there, people will decide, okay, I want to go to this room, I want to go to that room, I want to whatever, So we could teach about talking about the market outlook for 2024 and what we believe that's going to happen. Or somebody's going to be talking about how to get listings in this market, different things like that. So it's a fun event day. You can sign up directly with YPN. And then we have our launch party next Friday. A lot of you guys told me you're going, so I want to see you guys there, 6:30 to 10. The yacht is docked at Bayside. You can get your tickets as well on Eventbrite. So most of you guys, if you guys are here in the Monday Mortgage Minute, most likely already got emails like this. So go ahead, sign up with the launch party. You can get your membership and the ticket to the yacht at the same time, and also get VIP as well. So you could kind of do all in one here with this launch party, or you could just become a member and then join do the yacht party. You could do that as well, and click here. But would love for you guys to join and kind of help us in achieving this goal that really is going to be something that precedes me. I want YRD to be kind of passed down to the young generation. Nationally, what we do is we teach, the premise of the organization is to actually teach the youth, introduce them into real estate, right? A lot of us, including me, when I first started, the only thing I knew was real estate agent or realtor, right? I didn't understand anything about loan officer or title agent or contractor or inspectors, insurance agents, all of these different avenues that you kind of get into in real estate. And so really what we do is we go into schools, we talk to kids in high schools, we go to college campuses and we talk to them about being in the career real estate. And I need kind of help going to these schools and talking to people. So we'd love for you guys to kind of join and help us with that mission as well. Because I show up to schools and I'm like, you're going to go to school for what? For business administration? Nah, save your money, right? And probably some of the teachers don't like that. So I need somebody that's going to be a little bit more PC to be like, no, you can, you don't need school, but you can get it. Do you guys have any scenarios, any questions from what happened with you last week or anything that's kind of coming up on one of the deals that you have or anything like that? Nope. No questions, no concerns today?
We're elite.
I'm sorry? What was that,
I
Patricia?
said we're elite.
That's right. That's right. Well, if you guys don't have any questions or anything like that, we can head out. I will see you guys next Monday. Going to schools are dope. Yeah. No, that's what we're going to be doing a lot of. We have one already planned out for Realtus Week, which is in April, and then we have a couple down the line. I didn't really go over the events too much for YRD. The purpose of becoming a member is to really teach the youth and really be able to improve your business and have more things like this. That's not just me, right? That maybe we can have a broker owner like Kendra Mullen come in and talk about what she did to start her brokerage, right? Or Nicolette, what she does and how she got into luxury, right? Those are fun topics to talk about. And those are people that are going to tell you straight up, because I know them, that shit was not easy. I had to do X, Y, Z and do all of this. And it took X amount of time and things like that, right? And so that's really what I want to kind of accomplish and really foster that, because there's nothing that we really have here locally like that. So yeah, I don't know if you guys have anything for me, but if not, we will see you next Monday. Same time, we're going to start at 10 a.m. next Monday. There's no loans to lock for Hometown Heroes. So we'll start at 10 a.m. See you guys next week.
Thanks, Mike.
No problem.
Thank you, Mike. Have a great day,
Thank you,
guys.
Mike. Have a good one.
Thank y'all.
Bye.